Good morning, everybody. Patrick here with the Equity Management Academy live trading room, live streaming from Discord. We got a really volatile market this morning. Some economic news came out regarding unemployment, lower than expected by I think about a couple of 100,000 jobs, and the market obviously was caught by surprise because it came down, gold came down prior to the report to about 1855.60, and it looked like we had a leak of some kind until, as you can see, the market touched the buy one level, activating the target of the daily buy one level of 1856, which was set up for today. Not only did the market came down and tested that buy one daily level, but it came down and completed the buy two weekly target of 1859 that had been activated by the market coming down below the weekly average of 1899, which we prepared our traders here in the live trading room to act upon at a point where it was a good level to hedge, to take some profits, to take some money off the table, which is really what I recommended you guys to do. So the market came down to test this low, activating a daily buy one, not only a daily buy one, but activating a weekly buy two trigger at on the close of this bar at 7 p.m. Automatically, when this target was completed, the levels above were activated, the targets of 1884, 1883, and we actually recommended this trade in the private trading room, and we took out a really nice profit here. For those traders that can trade at night, that can trade the Globex, this is a great way to do it, because we post everything here for about 23 hours a day. Whenever something happens, it's posted. Whenever something significant happens or a signal of any significant nature, it's posted here. And as you can see here, we bought the silver at 27.58, and it's very clear signals harmonically engaging the weekly buy triggers from 27.10, 27.28, earlier signals that took place in silver. 27.58 is also targets from the weekly buy one, buy two levels activated earlier on the weekly. And we completed the targets as expected, and we recommended our traders basically to lock in the profits. Now, on the future side, if you're day trading, this is what we use basically to day trade the market. When you take a look at the bigger picture here in terms of what happened today, you can see that the market not only met the daily target of 27.56, but it also is approaching completing the weekly average of 27.96. Now, Once again, guys, as you know, when you're trading around the average, it's a 50-50 standard deviation. So take the path of least resistance. That is a place where you go neutral. And you wait for the market to activate the extreme levels above the mean, in this case for silver at 28.23 to 28.44, which is the daily sell one level, which is active right now because the market closed above the daily. And if we close above 27.96, we're going to engage the weekly average or the weekly momentum, which will turn bullish, negating this bearishness here like it did on the daily. It was the same thing will happen on the weekly. So now we'll have a weekly bullish price momentum and a daily bullish price momentum. And the target for the daily is 28.23. The first target for the weekly is 28.44, all the way up to 28.82, where it almost matches harmonically the sell-to level of 28.94. So I would say to you, based upon where we are harmonically, where the conversions occur harmonically, it's in that 28.82 to 28.94 level. That would be the target on the upper or the extreme above the mean upon activation on a close about 27.96. The gold market came down to activate the daily buy one level of 1856, again by coming down to making a low of 1855, and activated again the daily, the weekly buy triggers, and now the harmonic relationship of the buy one weekly and the daily mean have converged, activating a daily bullish price momentum and a weekly buy signal with targets of 1899 to 1901. This is the AI. This is the code that was written in C++ on TradeStation. What validates the AI here that I'm sharing with you is not only my results, that I think you can feel free to go to my website, EMA, with the number 2, trade.com, EMA2trade.com, and if you click on track record, that's what I'm using, that's what I'm accomplishing by using this information. The important thing that I'm trying to do here for you guys in my trading room is to teach you a systematic, methodical, mathematical probability model that essentially measures the extreme levels of the momentum of the supply and demand, extreme levels above or below. And so it is a systematic approach that we follow by using mathematics, advanced mathematics, vortex mathematics, W.D. Gann formulas, wave principles, and basically all in one filter that gives you a very simple presentation, and it produces a mathematical probability number, which is not a guarantee. The fact that the average price is standard deviation 50-50 or the sell one level of 90% doesn't guarantee you. What it tells you is that these are levels mathematically where the price can reach to an extreme wherein conventional technical analysis is called resistance or support. We use pivot points that we generate ourselves into the model that essentially are activated, automated, and produces color to give you a picture, an idea of where the market is, where the average price is. In green, it's around the average price. So automatically when you take a look at the algorithm and it's in green, you see, okay, it's around the average price. So you know that there are certain principles that I'm teaching you to follow this systematic, methodical approach. And as a self-directed individual, following this AI intelligence has produced some really remarkable results on my trading, on the way that I enter and exit a position. And it's more mathematically precise or technically precise than anything that I've used. And, you know, I've been around the block here a little bit. So what I'm doing here specifically is showing you guys how to take this intelligence that we're dealing with in this particular market. So if we go back to the basics here for a minute, just to kind of break down why I do what I do, is that I basically am using the elements to identify the sector of the market, which in this case is money. Gold and silver, you know, is real money. So we're trading in the money sector, basically. We're trading gold and silver, which is the real currency. And within this sector of gold and silver, for example, obviously, we have thousands of instruments that are available to trade. Not only do you have to use the futures contract to trade, but depending upon your expertise as a self-directed individual, you can customize this intelligence as a GPS for you to follow your portfolio. One of the things I have learned as a trader, and I realize clearly that not every trader is homogeneous, you know, and you can't fit every trader in a particular size or a particular box or a particular style of trading, because it's very personal. And you can't impose any style of trading, any methodology on anybody, because the application has to be individually applied, personally applied. And when you look at that factor, then you got to take into consideration the emotional condition, the psychological condition, basically because we're talking about a psychological game within a matrix, within a mathematics matrix. And what I have done basically by using this algorithm, by creating this algorithm, is put that focus, put that objective that I have into a specific structure that I can manage mathematically. And so, although the lines that you see here are simplified, it's a very simple presentation, the intelligence is deep within these levels that essentially trigger mathematical numbers that I'm teaching you guys here. The average price is 50/50 standard deviation. The sell one level is a 90, it's a 50/90 standard deviation to the mean. The sell two level, whether it's daily, weekly, or monthly, it follows the same mathematical principles that it is a 50/95 standard deviation to the mean. The sell one level is a 1-to-1 factor to the mean of 50-90% relative implied volatility. The sell two level is a 2-to-1 factor, 50-95% relative implied volatility to the mean. So I know, and I'm teaching you guys here in the room, those standard mathematical probabilities, so that when you see the market come down to the buy one level, the buy two level weekly, the buy one level daily, automatically you know the buy one level activated a 90% probability factor. The buy two weekly level activated a 95% probability factor that a reversion to the mean is going to unfold. And so when we take a look at these signals here, for example, it automatically, when it's activated, automatically we know that the reversion, if it unfolds, will bring us back to the mean, which is the target for that structure, for this period. And sometimes, you know, here again, the structure gave you 1856 on the average, let's say, all the way up to where we are now, 1893. Almost regaining the loss that we had yesterday in terms of dollars, but or at least, you know, half of it where we are. And this pretty much is purely mathematical. Whatever drove the price to these levels, it's irrelevant fundamentally, because the algorithm identifies the momentum of that energy, whatever the creation of that energy was. It's irrelevant whether it was the economic news, or whether it was somebody sneezing in CNBC, or, you know, a lot of these pundits, you know, farting on the internet, so to speak. And to me, to us, this is basically a mathematical structure that we apply systematically, methodically, to produce over 400% since last February. And I think you guys in my trading room realize that this is not a fluke. You know, this is a mathematical, or what I call it is a GPS for your trading, because you can turn this on whenever you want to trade, whatever time it is, in whatever country or time zone you are, and you can take a look at the structure, see where the market is when you are ready to trade, and that is when you pretty much enter the initial level. Where if you were active at 6:45 p.m. last night, when the market came into 1855 or 1856, which I was, you know, you would have bought this. You would have made this trade, or you would have taken out this beautiful profit here, you know, of about $20 or $15-20 at least. If you had multiple positions, for example, this is an example of how you use this when using multiple positions. And you don't necessarily have to use multiple positions using the full size contracts. Depending upon your profile, you can also use the micros. In the silver market, it's a 5-to-1 ratio for micro to a full size, and I think in the gold is 3 to 1. So you can buy 3 micros to equal a full size gold contract, and you can leg into it, for example, just to give you an idea if this fits your profile. One of the reasons why I do shares is because if I buy 3,000 shares, let's say, of something, I can trade those shares. I can trade out of those shares on a share basis. When you do one futures contract and you do one full size, and you can only handle one full size for most people, that's all you can do. And when you get into a target, let's say, and you complete the target, you just take it. You get out. There's nothing you can do. Follow the discipline. If you're using micros, you have 3 longs, you can trade them. Take profit on the first target, wait and see. If it activates another buy, then you go back in, either with the same position or add. So the way that you apply is up to you as a trader. The way that you use this GPS is up to you as the driver, so to speak. But the way I look at it is that this gives us, when the signal is activated, automatically your protective level. So if you entered the order earlier, let's say at, when it activated, let's say you follow the conservative, which is at 1863. The signal came in at about 61. Let's say you took the conservative, and you bought it at 63. 63 to 83 is a $20 target, and the AI tells you, it gives you 3 choices of stops. First of all, do not use a straight stops, so you don't use a straight stop. If you want to use a conservative stop, you put a stop right below your entry point. And that's your most conservative stop. And so that would be at 56. Or if you enter the weekly, that would be at 59. And automatically you have your signal activated, the trigger point activated, within the mathematical matrix and probability that I'm teaching you, which is not on the charts, but the color defines those levels. In blue, it tells you do not sell here, even though it may come down into that by 1 or even by 2, as opposed to looking when the market reverses, because the mathematical probability, if the buy 1 is 90% on the long side, it's only 10% on the short side. So as a trader, I want to use the highest probability in my favor to make a trade. And that's what I'm teaching you here. Mathematically, using probabilities within pivot points that identify the extreme levels above or below. And this area, this whole area, it told you accumulate between the buy 1 and buy 2 on the weekly signal. This is an accumulation area. When it came down to the buy 1, that's when you entered and activated, the daily. And when it came up to above the buy 2, you activated the weekly. And not only the weekly buy 2, but the weekly buy 1. And you begin to see how solid the signal becomes, or how solid the signal, how strong the signal is, and how for you to make an educated guess in terms of, based upon your profile, how you want to manage this instrument. Whether you get aggressive on stocks, futures, ETFs, just depends upon the style of your trading. One of the things that I use for myself and I recommend my traders in order to hold on to a position basically overnight, use the shares, use the ETFs. And I trade the nugget, I trade the dusts, which are 2-to-1 ETFs. I trade them aggressively. You don't want to hold these instruments long term, but trade them back and forth. They provide a lot of volatility that makes up, you might say, for the switch that you make in the way you manage the risk, either from a futures contract to dollars per share. And when you buy dollars per share, obviously your risk is what you put up, on the shares. There's no margin unless you buy margin with those shares. And I recommend for you not to do that. Just go in and if you're going to trade this, buy 1-to-1 dollar amounts. It already gives you a 2-to-1 leverage, so you don't need to get more aggressive. But again, how you manage the risk is really up to you, based on your profile. What I'm showing you here is not only pretty much how to take those fundamentals that if you go on the internet, you have now an incredible amount of experts out there, pundits that are throwing out numbers that are out of this world, basically, and one of the things that I do differently here is that I take that intelligence, which not only is a fundamental based research analysis, and I show you how you can produce 400% by trading that intelligence, what instruments to trade that intelligence in, what sectors to trade that intelligence in, and how to manage the risk within those instruments in those sectors. So I'm showing you live, thanks to this incredible technology that we have now, basically how to do it in a real-time environment, in a real account, in a real trading room, which is, I believe, what we do differently here at the Equity Management Academy. You want to continue to hold your net long positions. 1901 is the next target in the gold market. 2822 is your next target in silver on the day. And congratulations, guys, that covered our short positions yesterday in the room here. We recommended yesterday, actually, 6:04 a.m. to begin to cover 100% of the hedges, short calls, or bearish strategies as the weekly targets are completed. So I really enjoy sharing this information with you guys that are serious traders that want to make a difference in the bottom line in your trading account, as this truly can be a life transforming vehicle for you, especially during these chaotic times. Continue to hold your longs for the day, and I'll be updating you throughout the day here in the room. In the meantime, my friends, you take care. Have a great trading day, and also have a great weekend coming up. I'll talk to you soon.